what really happens outside. What happens, how the share prices go up, how the prices come down, what are options, practically everything. I'll give you an idea practically. So once you do the concept and then you do these type of questions, what will happen is that you will get double grip on the entire thing. Let me now go back and let me just cross check once again. Okay. So first thing is we should give different types of problems. Okay, now I think this part is clear. We will be doing different types of problems over here. Concept clarity, we will solve maximum problems. We will solve ICI module and we will do all. I'll give you all the notes, all right. I'll give you time to write down the notes also so that you don't lose out on it and you don't have to do it later. Plus friends, maybe I have not told it earlier. The class, whatever I am taking, so that you don't lose out on it, we will be keeping the recordings of the classes also available for all of you. Okay, so that way, let's say you miss out today morning's class, you can, you have articleship, you have to go to your office early, you can come back in the evening and attend the lectures, but it will not be available forever. It will be available for a particular duration. And one more thing, first 4 days the class is demo. Okay, so any of your friends want to attend, they can always attend it free of cost. After 4 days get over, we will set up username and password for each one of you. One username, password, only one access will be granted. Alright, so I believe my part is clear. Shall we now go to the students part and see what the students are supposed to do? Okay, students, you are supposed to do the following. Point number 1, and according to me, the most important thing, you should work out every question 2 times without looking. So if I am doing, let's say, 5 questions in the class today, you should go back home and work out every question 2 times. Why 2 times? I will explain to you later. Now in a nutshell, if I tell you, it is very simple. Our brain works with 2 things. One, it works with logic. So if you know the logic, remembering logic does not become very difficult. It becomes very, very easy. Point number 2, your brain works only on repetition. That means if you repeat the same thing again and again and again, only then that goes deep down your subconscious mind, after which even if you want to forget, you cannot forget. So if you work out a question 1 time in the classroom, 2 times from home, you do every question how many times? 3 times. Once you do it 3 times, you become so strong in it that you will not forget, and exam hall when you go, you will go as an expert, and that is where you can score more than 60 marks. This is the first and the most important thing that all of you must do as students. Second and the most important thing is, please ask me whatever doubts you are getting. Okay, don't think it's a stupid doubt or it is a very very stupid doubt and others will start laughing at you. If you have any such concerns, you can directly message me on this number personally so that nobody else comes to know. But please make sure you ask all your doubts. Your doubts are very, very crucial. Only if all the doubts come in front of me, I can give you solutions for those doubts. Alright? And the last thing, please make sure that you attend all the classes. Do not miss any of the class in middle. For example, Monday you attend, Tuesday you don't attend, Wednesday you attend. It's all a base. It's like a building. I'm taking from the foundation. One foundation goes, the next class will become complex. Then the next one will become even more complex. Please ensure that does not happen. Now friends, these are the things that I should do as a faculty. These are the things that you should do as students. So together as a team, we can win-win. I'll give you a minute's time. Can you write down this thing in the front page of your concept book so that last day of the class we can cross-check that whatever we discussed that day, have we actually done that? I'll give you a minute's time. Can you please write down this in your books? Just give me 1 minute, friends. Alright friends, can you please write this down in your books? Once you're done writing, please chat and let me know you're done, okay? Hi Kishore, you are coming under old syllabus. Yes, even for the old syllabus, we are doing the questions. That is the questions which are coming as exam questions also. And the study material problems for old and the new syllabus are the same. Now in 2021, they have added some more new questions. That is an added advantage for the old syllabus. Apart from this, for the old syllabus, I will give you a differentiation and I will explain that part to you also. Who else is there coming under old syllabus? Can you please chat and let me know? Done? Perfect. Perfect. So friends, now this is a contract between you and me. Okay. As a faculty, I should do these points that you have told me. I should crack different kinds of problem. I should give you concept clarity. I should solve maximum problems. I should do the ICI module. I should give you good notes. And as students, what are you supposed to do? Work out every questions 2 times without looking. Ask all the doubts that is coming to you and attend all the classes without fail. If I do my part with full dedication, you do your part with full dedication, I will also win, you will also win, and together as a team, we will crack this main issue that many of us are facing. That is, you will all become chartered accountants. Alright, so shall we start positively with today's class now? Okay, Narsimha, your old syllabus. Asma, your also old syllabus. Let me give you a differentiation between old and new. Okay. Old syllabus versus new syllabus. In the old syllabus, there are some topics which are exclusively old syllabus. One of them is factoring. Okay. Other one is leasing versus borrowing. And the third one is there is something called as traditional capital budgeting. These 3 topics are not relevant as far as the new syllabus are concerned. For the new syllabus, okay, what will be more relevant to you will be there's a concept called as value at risk. This is not applicable to the old syllabus, but this theory is coming partially in the old syllabus under QT, costing, program evaluation and review technique. Alright, so just note it down. So these topics I'll take separately one day for the old syllabus students, and value address I'll be taking for the new syllabus students. Alright, just note it down for your reference. Alright, I think this part is also clear to all of you. Okay, rest everything is exactly the same. There is no other difference as far as SFM is concerned. Costing, old is very different, new is very different. That's why when I take the costing class, I'm taking exclusively new syllabus classes. I am not mixing them up with the old syllabus. But SFM, both are 95% same. Only these are the only differences that are coming in between them. Fine friends, I believe everything is done. Shall we now positively start with today's class? One more thing I need to let you know, I didn't inform you earlier. Our class will be 6:30 to 9:30. It will be Sunday to Thursday. That is 5 days a week. All right. In this time, the timing will be first session 6:30 to 8 o'clock. All right. Session number one. You'll have a 15 minutes of breakfast break from 8 o'clock to 8:15 so that you don't get exhausted just sitting 3 hours non-stop. Then the second session would be from 8:15 to 9:30. All right. So this way, once we go, whatever we take, it will be optimum learning and there will be no time wasting happening over here. All right. Shall we now start positively with today's session? Everyone take your concept book. In this, you write down chapter number 1, basics. Chapter number 1, basics. All right. Inside this, write down concept number 1, NPV. Friends, I'm starting from the scratch, assuming you don't remember anything at all about the subject. All right. NPV, the full form is net present value. All right. 1 minute, friends. Okay. Net present value. Now, let me take an example in this. I will take one person from the chat box. Okay. I will take Rintu. Okay. Let us assume Rintu is writing his exams in May 2021, and after his exams get over, he qualifies as a chartered accountant and then he starts practicing as a CA. Okay, he's going to be a CA in practice. So now tell me, if you want to become a CA in practice, all right, what are going to be the cash flows, or what will be the places where you have to invest your money, and what are the returns that you get back as a CA? Come on, think and tell me. I'm going on. I will not wait for your reply, but you keep chatting, okay? Because if I'm waiting, it's like getting too much time, like 30 seconds, 40 seconds. I have to wait for your reply to come in. So I'll put some numbers. You can also assume some numbers in your mind. Now tell me, if you are opening an office as a CA practicing person, what are the investments that's applicable to you? One, you need to get a space. So what do you pay for that? Rent, deposit. Okay. What else will come? You need to get some table, chair. You need furnitures over here, right? After that, what is the next thing that's required? Then you might require, to spend some money on the internet connectivity, or for the purpose of interior decoration, etc. All together, if Rinto wants to start as practice office, his basic investment would not be very high. So just tell me, how much money are you looking as an investment as far as a CA office is concerned? Let us say a rent deposit will turn out to be, let us say if you're paying a rent of 40,000-50,000, or let's say 25,000 a month initially, you will end up paying a 10 months deposit that will be around 2.5 lakhs, furniture, etc. Let's take a maximum investment of 10 lakhs. Once he puts this money into the business, okay, he'll start getting returns. Okay, let us say the return that he gets is year one, he is making a cash profit of let us say 2 lakhs. Year 2, he is making a profit of 5 lakhs. Year 3, he is making a profit of, let us say, 10 lakhs. And assume after that he decides to stop his CA business, and he will just think of taking some job in some particular company. Assume for time being like this. So friends, now tell me, if 10 lakh is the money that he invested, he is getting back 2 lakh, 5 lakhs and 10 lakhs returns. My question to you is Rinto happy or is Rinto sad? This is my question. I'll give you a minute's time. Write down this in your books. Think and tell me, is he happy or sad, and put that in the chat box. Alright friends, I believe you have all written down till here in your books. So now the question that is put in front of you is Rinto happy or is Rinto sad? Friends, to understand that, we work out something what we call it as the NPV. Kirtana says Rinto is very happy. Alright, any other answers? Perfect. So I think only Kirtana feels he is happy. Others are all totally confused whether he is happy or not happy. Kishore says he is not happy. Alright. Augustine says he is happy. Wonderful. We chartered accountants only are not able to decide whether a CA will be happy or not happy, is it? Jivraj says happy. Abhishek says happy. Asma not happy. Now tell me, why do you think some people are happy, some people are not happy? It depends on one thing. That is what I call it as the investor's expectation. Asma is not happy because she is expecting I should get at least 20 lakhs money. I am getting only 10 lakhs. Whereas Abhishek is happy because I was thinking of only getting 1 lakh, 2 lakh, and I am getting 10 lakhs. I am so happy. So it's all dependent on something called as the investor's expectation. Yes, Raghutama, what you said is right. That is nothing but the cost of investment rate, or what we call it as a discount factor. So here let us assume the discount factor is turning out to be 10%. Okay. So we can now find out whether they are going to be happy or sad, keeping this thing here. Cash flow, discount factor 10%, discounted cash flow. Year 0, minus 10 lakh is invested. Okay. Year 1, 2 lakh is the inflow that he is getting. Year 2, he is getting an inflow of how much? 5 lakhs. And year 3, he is getting a return of how much? 10 lakhs. So we need to take the discount factor now. It will be 1 over here, 0.909, 0.826, 0.752. So once you multiply, what is the answer? You get minus 10. Sahana, you say he is reasonably happy. Oh, that's a very complicated term. How do we define reasonably? Friends, can you do this and tell me what is the NPV? I'll just go get my calculator and come back in a minute. I've got my calculator. You please work it out on your own and then tell me what is the answer that you get. It will be 1.81, 4.13, 7.52. He is getting an NPV of plus 3.46. NPV is positive, means accept the project, he should start practicing as a CA. I hope you have written down till here. Can you please write down and let me know? Yes, Raghutama, your answer is right. Please write down and finish it off. So here we learned one thing. I hope everybody has written so far. Can I go to the next part? In case I become fast, let me know, okay? If I go a little slow, it's okay. You know, everybody will understand. Some of you might be a little bored. But if I go fast, if 2 or 3 of you don't understand, that is more damaging than, you know, me going fast. So I will not rush. I will go very slowly, alright? And I'll ensure that all of you understand everything. So friends, here we understood one thing. As far as the NPV is concerned, you can have 2 things. One is you can have NPV positive, other one you can have NPV negative. NPV positive means what? You are supposed to accept the project. NPV negative means what? You are supposed to reject the project. Let me ask you a third question. What if your NPV is 0? What are you supposed to do? Think, I will tell you the answer later on. Alright? Okay, Vetri Gautam, I'll show you the previous slide. Please write it down first, then only we'll go forward. Okay, friends, I believe you are all done till here. Can I proceed? Done. Perfect. Just draw this chart also in your books. Relax and learn it. No pressure. If you feel I am going fast, let me know. I will not go forward unless each and every one of you has understood. That's very, very important. All right. All right. Shall I go to the next one? Okay. Binoy says reject if it's zero. Answer I'll give you later. Arshi says find IRR. Okay. We'll discuss all that. We'll discuss all that part. Okay. Fine. Ragutama also says compute the IRR rate. I'll come to that part later. That's the next concept. So we'll learn it along with that. Okay. It is for timing we have understood that NPV positive we should accept, NPV negative we should reject. Shall we go to concept number 2 now? Concept number 2. Concept number 1 was NPV. Concept number 2 I will call it as cash flow. Alright. Friends, in SFM or in real life also, we focus only on the cash flow. We don't focus on profits. Tell me if a company has got a profit of 10 lakhs, but there is no cash coming out of that. Is there any use of that company? As a CA in practice, you will face this like crazy here. Every month end, salary has to go on time. That is a cash outflow. You raise bills to the client might not pay you immediately. They might pay you after a month or 2 months of time. So in that case, you get the money after 2 months, but salary has to be paid immediately. You will face something called as a working capital crunch. That is why we don't focus on profits. We focus on cash flows. Only if the CA practice is giving you good cash flow, go ahead with it. Otherwise, do not go ahead. Cash flow can be found out using a formula. Profit after tax plus depreciation minus capex or investment minus additional working capital. Let me explain the logic of this to all of you now. Profit after tax is the net profit. Net profit is found out after taking care of depreciation and all the non-cash items. So once I add back depreciation, what do I get over here? I get my cash profit. Alright. Assuming that the debtors and etc. is coming on time. If there is a flaw in the debtors or the debtors are getting blocked, it goes as additional working capital. Are you understanding my point? Capex can be investment that you're doing in furniture. Suppose you are getting a lot of clients, you want to expand your office. You will take some more extra space, pay some more rent deposit, buy some more furniture, buy some more computers. That will come as capex. Alright. And then the next one will be additional working capital. So in reality, the cash that you have is nothing but what is the cash profit that your business is generating minus how much your money is getting blocked in debtors minus whatever is coming as capital expenditure. Can you write down this in your books now? Alright friends, have you all put up till here in your books? We have learned two concepts now. One was we learned about NPV. Second thing what we learned about is cash flow. Let me now go to concept number 3. Concept number 3 is what we call it as discount factor. Alright, friends, I told you earlier, discount factor is nothing but investors' expectation. You normally in SFM you get the discount factor in the question itself. So they will tell you discount factor is 10%, discount factor is 12%. What we do, we just believe that is discount factor. Now let us learn what practically is discount factor. Practically in this example we were talking about Rinto. As I told you, the investors can either be happy or the investors can be sad. How to decide depends on the discount factor. How will you derive at the investor expectation? I think earlier, one person told yes, Rinto should be happy. Someone else told that no, Rinto should not be happy. Am I right? How that is decided, I will tell you now. Rinto actually has 3 options. Option 1, if he is having 10 lakh rupees with him, he can put this 10 lakh rupees in bank. If he puts this money in bank, let us say he will get 6% return. Option 2, what Rinto can do is he can join his father's business, his family business. His father might be a textile trader or anything else. Let's say he's a textile trader and he's doing textile business. Rinto, instead of putting this 10 lakhs into a CA firm, he can put the money in his father's business. There maybe he's getting 10% return. Option 3, he can start his CA practice. Okay. If he does this, how much return is he going to get? This is question number 3. So if you see, he's got 3 options. Bank will give 6%, father will give 10%. CA practice should at least give 10%. If CA practice does not give 10%, if it gives 8%, what is better? Go and do your father's business. That is how his expectation is actually derived. So investor's expectation is nothing but it is the opportunity cost or the cost of the next best foregone alternative. Here, if I don't do CA in practice, I can join my father's business. There I can get 10%. Can you write down till here in your books now? One minute, friends, there is some duplication happening. All right. I think the duplication would be clear now. Alright friends, have you all put up till here in your books now? Can I go to the next part? Alright, so you can write down in your books, okay, discount factor is nothing but investors' expectation. Okay, now let me take you to correlating NPV with all these things. Earlier I told you NPV can be positive or NPV can be negative or NPV can be 0. NPV positive, you said you should be accept the project. NPV negative, what are you supposed to do? Reject the project. Am I right? Now, when you say NPV positive, accept the project, it's only because, okay, I am getting more return than expected. Here, Rinto was expecting how much return? He was expecting a return of 10%. Only if he gets more than 10%, that is where his NPV will actually become positive. All right. Why he's rejecting over here is only because I am getting less than expected. All right. Can you please write down these two things in your books now? One minute, friends. What is this? There is some duplication happening. Okay. 1 minute. I got the point. All right, I understood. I think now it will be sorted out. Okay. Yes, it's sorted out now, friends. Can you write down this in your books? I'll give you a minute's time. Alright friends, can I go to the last part now? Now the last question is NPV 0. Friends, NPV if it's 0, I got the opinion in the chat box that it should be rejected. I will now ask you one question. Accept, I am getting more than expected. Reject, I am getting less than expected. 0 would mean I am getting exactly what I am expecting. Let me ask you a question, friends. You are expecting how much marks in your SFM exam? 60 plus. So friends, if you get exactly 60 marks in the examination, are you happy or are you sad? Will you tell that you are sad because your NPV is 0? You got exactly what you expected, and will you reject those marks? The answer is no. You will be happy. Why? Because I expected 60, I got exactly 60. But when you do that, the NPV is 0. So friends, when NPV is 0, also what are we supposed to do? Accept the project because you are getting exactly what you are expecting. Or if you want, you can start your father's business also. Because both the cases you are getting exactly the same return. But you should not tell that I am rejecting the project. There is no reason for you to reject the project over here. Alright? Can you please write down this in your books and finish it off? Alright, so friends, we are done with this part also. Shall we go to the next one now? Okay, so we learned the 3 concepts so far. We learned what is NPV, we learned what is cash flow, and we learned what is discount factor. Now let me go to concept number 4, which is called as IRR. Okay, IRR is the rate at which NPV becomes 0. Something what you learned at your IPCC level. Let us refresh this before we go forward any further. This was a little tricky. So I will do it over here and show you how we can crack this one. Alright. IRR is what? It is a rate at which NPV becomes 0. I'll put the numbers again. Here 0, 1, 2, 3. Cash flow. What is the cash flow we had? 10, 2, 5, 10. Earlier we took a discount factor of how much percentage? 10 percentage. Am I right? Friends, I'll do one thing. I think I'll do this in let me do it here itself. Let me not go to Excel. Discount factor would be 1, 909, 826, 752. So what is the discounted cash flow I get over here? I get minus 10. I get 1.818. I'll be getting 4.13. 7.52. Am I right? Here I am getting the answer as 3.468. So my NPV is what? Positive or negative? Positive. In order to get IRR, I should get a negative NPV. So let me take a higher discount rate. I think I can go for 15%. Let's try 15% now. 1. Do you know how to take the discount factor using your calculator? You should do 1 divided by 1.15. I'll write it down. 1 divided by 1.15. That's how you get in your calculator. 1 divided by 1.15. Press equal to, you will get the first number, 0.869. Again you press equal to, you will get 0.756. Again you press equal to, you will get 0.657. And you can go on like that. Alright. Try it. Some calculators it might not work out. If it is not working out, just ignore it. It might be an issue of your calculator. Now here you'll get the number as minus 10. 1.738. 3.78. And the last one would be 6.57. Let us check what is the answer we get now. Minus 10, it's still giving you an answer of plus 2.088. Tell me the NPV is positive or negative? Positive. I need to do something more so as to make the NPV negative. Just a minute. There's a doubt. Frank, why are we deducting additional working capital? See, I'll explain that to you. Additional working capital is actually fund block. Maybe I'll give you one other example after I complete IRR so that this doubt becomes clear for you. Okay. I'll give you an example of a trading company. CA in practice was a service company. With that, maybe you will be able to understand the logic of this. Okay. Now, here also it's positive, means I should take a next higher discount rate. I'll take a next page. Here, cash flow. Let me try 20% now. Discounted cash flow. Alright. 0, 1, 2, 3. Minus 10, 2, 5, 10. Let's check for 1 divided by 1.20. Be 0.833. 0.694. 0.578. Friends, just 1 minute. I'll be back. Just 1 minute. Sorry friends, I'm back. So second one will be 2 into 0.833, that is 1.66. 5 into 0.694 is actually 3.47. And the last one would be 5.78. Here also we are getting plus 0.91. Amazing. So NPV is still positive. I'll take the next higher discount factor now. Let me take 21%. We are very close to getting a negative. So it will be 1 divided by 1.21. That will be 0.826, 0.683, and 0.564. So the discounted cash flow would be over here be minus 10. 2 into 0.826 would be 1.652. 5 into 0.683 would be 3.415. And the last one would be 5 into 0.683. Yes, and the last one would be 5.64. Let's check what is the NPV now. It's again positive, my dear friends. I have taken a complicated question. So we need to take a higher discount rate. Shall we try 25%? I'll put the numbers again over here. Here, cash flow 0, 1, 2, 3. Cash flow is what? Minus 10, 2, 5, plus 10. Alright. Let me try 20. We got 0.7 at 21%, right? Let's try an aggressive 24%. Let's try with that. 1.806, 0.650, 0.524. Let's check it now. Be minus 10, 1.612, 3.25, and the last one would be what? 5.24. Again positive, my dear friends. This is making our life miserable. Let's try 25%, and I believe now it should become negative because we are very close to getting a minus number. 0.80, 0.64, 0.512. You must be thinking in exam, do we get so much time to do this? I will give you an answer for that. We have shortcut, but let's first do with the common sense method, because no, I don't want to directly jump to the shortcut and explain to you. Let's do it this way, then I'll tell you the shortcut. Okay, 1.6. Come on friends, pray to all gods possible. This time it should be a negative. 3.2, 5.12. Congratulations friends, we got the answer as minus 0.08. So friends, at 24% it is plus 0.102, but at 25% it is minus 0.08. So NPV 0 lies between 24% and 25%. Alright, for that let me just take and do some interpolation. At 24%, my NPV is 0.102. At 25%, it is minus 0.08. I am looking for an NPV of 0. From here till here, the total distance traveled is 0.102 plus 0.08, that is 0.182. Okay? But from here till here, it is only 0.102. Friends, 24% to 25% is actually having a gap of how much? 1%. I want to know what will be the discount factor over here. So, for this purpose, what I will do is, I will use the formula 24% plus the change from here till here. Maybe I'll use a different ink pen. Change from here till here is what I am worried about. That is 0.102 divided by 0.182. So the total change is 0.182. I take only this proportion. I'll get the answer as 24.56%. At this rate, my NPV becomes 0. I will now give you some time to write down this entire thing. Write it down, let it be an experience. Start writing from here, I'll give you a minute's time. Can you please write it down? Santosh at 30% it is minus 95,000, is it? That will become too far away. We need to keep the gap between 1%. Alright? Alright friends, we are also live on YouTube. Let me just check if there are any students chatting at YouTube. Just 1 minute. Sharanya, Ramya, good morning. Okay, now it's visible here also. Okay. Being the first 4 days, the classes will also be streaming on YouTube. So if any of your friends want to attend, you can always ask them. Good morning, Ramya. All right. This week, full up to Thursday, the classes will be parallelly streaming on YouTube also, so all of you can attend parallelly. All right. Have you all put up till here? Can I go to the next page now? All right. Okay, I'm going to the next page. Please write down this now. Good morning, Ramya. Good morning, Sharanya, Aishwarya. And there's one more thing I forgot to mention. All the notes that I'm writing over here, it will be shared in the WhatsApp group, where the people who have registered are joined. So all these notes also will be available with you. So if you miss out something when you're writing, you can always use these PPT notes. All right. Can I go to the next part now? Okay. Can you please write down this in your books now? Alright friends, have you all put up till here? Can I go to the next page now? Please draw this interpolation also. Alright friends, have you all put up till here in your books? Now I'll tell you the logic of this IRR. Have you got the answer as 24 point? Okay, maybe some are still writing, let them finish. Please, once you're done writing, please chat and let me know that you're done, okay? Alright friends, I believe you're all done with this. Yes? Perfect. So let me go to the next part now. Alright? Done. Perfect. I'll go to the next part now and I'll tell you what is the logic of this 24.56% is that Rinto has expectation of only how much percentage? 10 percentage. But he has actually got how much percentage return over here? 24.56% return. Hence, he is happy and hence NPV is positive. Can you please write down till here in your books now, friends? Done? Alright. So friends, we are done with this concept also. Shall I just revise these 4 concepts once again now? We started our class today with a very basic concept of net present value, where we use this table here, cash flow, discount factor, discounted cash flow. We can actually give it a formula. The formula can be present value of inflow minus present value of outflow. Everyone please repeat the formula. Present value of inflow minus present value of outflow. These three things are present value of inflow. This is what present value of outflow. So this way we get the NPV as plus 3.46 and hence what are we supposed to do? We should accept the project. Alright. So let me give a summary of the 4 things that we learned. Let's create a summary and then take a break for the first session. 1 minute. Alright. So we learned 4 concepts in the morning. We learned what is NPV, present value of inflow minus present value of outflow. Then we learned about cash flow. Cash flow, we learned the formula profit after tax plus depreciation minus additional working capital minus capex. I need to clarify that doubt, right? I'll clarify this doubt right away now and then only we'll take a break, okay? Third thing that we learned about was what? Discount factor. This is nothing but what investors expectation. Okay. And the last thing what we learned right now was what? IRR, or the rate at which NPV becomes zero. Can you draw this chart in your books, all of you? Friends, I hope the class is going comfortable. Please do let me know if there is any difficulty, audio, video, understanding wise, anything. Please let me know. All right. Please keep giving feedbacks if anything is going wrong anywhere. Only feedback is the only way I can improvise on what is going on. Alright. If technical issue somewhere, let me know. Immediately I'll take action on that also. Fine friends, I hope you have all put up till here in your books. I will now give you an example of working capital. Alright. Now let's say for example we'll talk about a gold showroom. Let's talk about Tanishq. Okay. For Tanishq also, what will be the formula for cash flow? Profit after tax plus depreciation minus capex minus additional working capital. Now I'll tell you what is the meaning of this additional working capital over here. Okay, listen very carefully. PAT plus depreciation, are you all clear? This will give you what? This will give you the cash profit. As far as Tanishq is concerned, what is the investment coming in Tanishq? It will be the building and the interior mainly. Am I right? But there is a much bigger investment and funds getting blocked in gold. Once you go to any gold showroom, first do you see many dolls standing over there and wearing some gold jewelry? That gold jewelry, is it for sale purpose or is it for display purpose? It is for display purpose. Okay, Arshi, sorry I didn't give you the expansion of this. I'm really sorry. Capex would mean capital expenditure. Okay. I'm sorry I didn't elaborate this word. My mistake. Okay, I hope it's clear to you now. Gold, once you enter the showroom, there is a person standing at a display stock and displaying the gold, or there will be some doll standing over there and they'll be displaying this gold. That is display stock. That stock can never be sold, or even if they sell that gold, it has to be replaced by another gold over there. That is what we call it as working capital. There are two types of working capital: temporary working capital, permanent working capital. Display stock is an example of permanent working capital, which is nothing but which is an investment into the company. Your fund gets blocked over there. That money can never be retrieved back. That is why we show this also as a capital expenditure. Alright. Can you please write down this in your own language and so you can understand what is the meaning of additional working capital also. Thank you, Sharanya. Kirtan, you have a doubt. What is the formula for IRR? Kirtan, there is no such formula for IRR. I'll share a shortcut formula later. But in reality, to get the IRR, the logic is very simple. It is the rate at which NPV becomes zero. You have to keep guessing 10%, 12%, 15%, 20, 25%, 24%. And then you see one has to be positive, other one has to be negative. In between these two will lie your IRR. So that is the only real manner in which you can actually check the IRR. There is a formula, I call it as a shortcut formula, but that will never give you the accurate answer. It will only give you the approximate answer. I will teach you that when we are doing bond valuation. Alright? Alright friends, I believe you have all written down till here. So maybe I'll give you a note if you want to know. Working capital is treated as an investment because funds get blocked and can be retrieved Only when the company shuts down. Only when the company shuts down. Can you write down this also and finish it off? Alright friends, have you all put up till here in your books now? Okay, so shall we now take a break friends? Time is 8:15. We'll take a 15 minutes break, after which we'll do the next session. Alright? Fine, let's take a break. See you after the break. Thank you so much. Abhilash, I've given a break now. Should I stop the streaming in Caster or should it continue? So I'll just go. Friends, I'm back. Can you see me? Abhilash, even YouTube, I don't have to do anything, right? It'll directly start streaming there also, right? Okay, perfect. Perfect, Abhilash. Thanks. Please reply in the chat box and let me know that you can see me. Vetri Gautam, you want the previous slide? Vetri Gautam, is this the slide that you need? Perfect. So I believe everyone can see me now. Even on YouTube, students, if you are live there, can you please confirm that you can see me? Okay, that's perfect. So shall we continue now, friends? Let's just revise what we learned before the break. We learned four things. One, we learned about NPV, that is nothing but present value of inflow minus present value of outflow. All right. So here, if NPV is positive, we should accept the project. If NPV is negative, we should reject the project. Then we learned about cash flow. Cash flow, what we learned was the formula is profit after tax plus depreciation minus capital expenditure minus additional working capital. Alright. So here we taught you that working capital is nothing but the fund required or the fund which is blocked into the business. That much money, even though is there in your profit, you cannot withdraw. So that gets stuck over there. Third thing that we learned about is discount factor. Discount factor is nothing but it is investors' expectation. Alright. And the last one that we learned was IRR. IRR is a rate at which NPV becomes zero. Now we go to a very, very important concept, friends. Write down the next concept heading. That's concept number 5. Am I right? Concept number 5. The most important concept according to me, you can give it that way. Because once you know this, you are actually getting done through major of the advanced topics of SFM. How to value any asset. Please write down this heading in your books. Hi Loknathan, good morning. Okay, shall we start off now? Just a minute. Is the video clear in YouTube? I see there is a little blurred vision is what I am getting. Just confirm that. But I think in the website it is very clear. Just confirm. The writing in the YouTube is not very clear is what I feel. Just check and let me know if what I am thinking is right. Writing in the website Students who are attending on YouTube, please confirm that you can see the video clearly. Now, for example, I have written how to value any asset. Just confirm that the writing is, very much visible to you, or is it blurred? Just inform Abhilash, give me a minute. Abhilash, I think the video is not clear in YouTube. Can you please check? Okay. Alright friends, let's continue now. Abhilash will take care of, the video. If it's not clear, he will take care of it. I will anyway start off with this, how to value any asset. Okay, and at where it's visible for you, whether it's visible. Okay, so maybe it's something wrong with my phone. Okay, fine. Alright friends, to explain this concept, I'll take one person from this classroom. Let me take the name of Vetri Gautam. Now let us assume Vetri Gautam is a person who loves to go on long drives. Okay. In my example, let us assume that Vetri Gautam is going to be an auto driver. Now tell me, for being an auto driver, what is the asset that Vetri Gautam requires over here? He will need an auto. He will go and check in the market what is the price for the auto, and he gets to know that the cost of the auto is turning out to be, let us say, 2 lakh rupees. Vetri Gautam is now confused. Should I buy this auto or should I not buy this auto? Alright. So in that case, what Vetri Gautam will do is he will just check and do some analysis. Okay. He will see that if I buy the auto, let us assume the life of the auto will be 1 year. We will assume that Vetri Gautam is a very rash driver and he will drive the auto so badly that after 1 year the scrap value will also become 0. And in this 1 year, what will be the revenue that he will get? He will be getting auto charges minus what are the expenditure that he is going to get. The expenditure will be petrol, repair and maintenance, etc. So friends, now life is told to be 1 year and the cost is told to be how much? 2 lakh rupees. When he did this calculation, his cash flow after 1 year, okay, turned out to be exactly 2 lakh rupees. What is the cost of buying the auto today? 2 lakh. What is the cash inflow? Okay, cash flow means I'm talking about cash inflow after 1 year turns out to be how much now? 2 lakh. So my question to you is, should he buy the auto, yes or no? Come on, I want you to interact and tell me the answer in the chat box. I'll wait for 30 seconds. Please reply to this question. Okay, first you write down this in your own language. Vetri Gautam wants to go for long drive, so he purchases an auto and the cost of the auto is how much? 2 lakhs. Please write down. Think and tell me, will he buy the auto, yes or no? That is the question that I have put up in front of you. Okay. Shalu Anna says no. Soumya says no. Vivek says no, I should not, he should not buy the auto. Frank says no. Sairam says no. Perfect. So all of you are getting this common sense that he should not buy the auto. Let me put it over here. Okay. I'll just put it over here. I'll just draw a table. Situation number 1. The cost of the auto is turning out to be how much? 2 lakhs. Cash flow at the end of 1 year is turning out to be how much? 2 lakhs. So what is the decision that you told me right now? Decision is don't buy the auto. Now you told don't buy the auto. Why? Because the logic is very simple. This guy, who's the guy who's buying the auto? Vetri Gautam. Vetri Gautam, if he buys the auto today by paying 2 lakh, 1 year he will work very, very hard. And after 1 year, if he is getting 2 lakh, he would say, why should I simply do this? Instead, what can I do? I can invest 2 lakhs in bank at, let us say, 10%. Okay. If he puts the money in bank, he will at least get how much percent interest on that? 20,000 rupees. We are assuming for time being that the interest rate turns out to be how much? 10%. So, is it not better to put the money in bank and relax at home rather than working so hard? So, you will say the answer is no. Now, if Vetri Gautam says no, and he does not want to buy the auto, normally all the auto fellows will say no only. Why? Because the location, let's say Vetri Gautam, where are you from? I am assuming that Vetri Gautam is from Tamil Nadu. So, what I am trying to say is that Rakesh, you are saying that no because of additional expense, petrol and repairs and maintenance. No. This 2 lakh is the cash flow. Cash flow means it is cash profit which is after petrol and all the repairs and maintenance. So this 2 lakh is after reducing everything. This is the cash profit that you are getting in your hands only. Alright. So basically why he does not buy the auto is because if he puts the same 22 lakhs in bank at 10%, he will get 20,000 at least interest. Here he is getting nothing at all. Now, if Vetri is not buying the auto, normally nobody else will buy the auto because the market is the same. For example, if Vetri is from Chennai, alright, Chennai, if I ride the auto, the returns that I get will be the same returns that other fellow riding an auto will also get because Chennai market is the same. Assume that Tarun Jagdish is selling the auto. Vetri is buying the auto. Now Vetri has told, no, I am not going to buy the auto. Just like Vetri, everybody else keeps saying, no, I will not buy the auto. Now Tarun is worried. Nobody is buying auto from me. What will I do now? I need to sell my autos. The only way I can sell my auto now is by reducing the prices. So I will call Vetri. Vetri, I have a special offer for you. I will give you this auto for 1,95,000 rupees. So now let's think from Vetri's point of view. Today he buys the auto at 1,95,000. After 1 year he will sell the auto at what? Not sell. He will get how much cash in his hands? 2 lakhs. Tell me, should he buy the auto? Yes or no? Come on, put in the chat box and let me know. Sairam, you are saying present value of 2 lakh is less than the cost. Technically, you are right, but auto drivers won't think like that. They will never say, present value is less, etc., etc. So let's think from an auto driver's point of view and analyze this question first. Okay. Sharanya says no, even if I am selling the auto at 1,95,000. Sharanya, now he is making a profit. Why are you saying no even now? Come on, others, please put in the chat box. Sharanya says no. Vivek says no. Shalu says no. appreciable but still not worthy. That is what Vetri Gautam is saying. He is the buyer, he is the final decision maker. Asma says no, Sitara, Chandana all say no. Friends, the answer is no because if he puts 1,95,000 in bank, he will get 19,500 as interest. Putting the same money into the auto, he is getting only 5,000 profit. Again, what is the answer? Don't buy the auto. Okay, now Tarun is worried. Nobody is still buying the auto. Tarun will call Vetri. Hey Vetri, special offer for you here, 1,90,000. Please buy the auto now. After 1 year, Vetri will get how much money? 2 lakhs. Come on now, think and tell me, should he buy the auto, yes or no? Augustine says no. Any other answer? Let everyone think over it. I don't want to rush on the first day itself. Saddam Hussein says no. Raghudama says until he gets return equivalent to 10% as you mentioned, the answer is no. Wonderful, Raghudama. So here again the answer is going to be no. Fine. Now Tarun is frustrated. Vetri is not buying auto from Tarun. Tarun will call Vetri. Vetri final offer 1,80,000. At the end of 1 year he will get 2 lakhs. Now tell me, will Vetri buy the auto, yes or no? Vetri, now the profit, okay, you are saying 20,000. Let's just give me the answer for this one. Come on. Yes. Sharanya says yes, he can buy. Let me get others' answers also. Anand Barry says yes, he can buy. Narishma says yes, Asma says yes. Suddenly the answer has become yes now because 1,80,000 if you put in bank, you get only 18,000 of interest. But here you are getting how much? 20,000. So yes, he will buy the auto. Now friends, let's think about this practically. Okay, he can buy the auto. Okay, if this is the case, just like Vetri, everybody in Chennai will now come to me to buy auto because everyone is going to get a positive return out of this. Suddenly the demand goes up. Now Tarun is feeling, oh God, I shouldn't have reduced it to 1,80,000. That became a little more. So Tarun will put a googly. He will tell, sorry Vetri, the price is not 1,80,000. The price is going to be 1,81,818. Come on now, I'll give you a minute's time. Think and tell me whether you should buy the auto, yes or no. Come on. Vetri, you're saying actually no, because if we get more return than bank, then there is point in doing business. Exactly, you're getting more returns than bank. Bank you're getting 18,000, here you're getting 20,000, right? Anne and Mary says yes. Any other answer now? Everybody is confused. Everybody is taking their calculator now. At the end of 1 year, you will get the same 2 lakh. Come on, tell me. Divya Raj says yes. Shalu says yes. Vivek says yes. Santosh says yes. Saddam says yes. Gokul says yes. Friends, at this point, if you put in bank, how much will you get? 18,181. Grishma, you got the NPV as minus 18. You shouldn't get that. You have just rounded off. The NPV is actually 0 at this point. Okay? The NPV is 0. It is not minus 18. You did that because you must have taken just 0.909. Take the correct decimal 0.9090909. You go on doing, you will get exactly the NPV as 0. Friends, I would tell you at this point is the maximum price at which auto should be bought. Price should never be more than 1,81,818. Even 1 rupee more than 1,81,818, Vetri will not buy the auto. At 1,81,818, he will be inclined to buy because he is getting 10% return that he has exactly expected and his NPV becomes 0. So, the moral of the entire story is that in the long run, I'll just write down over here, in the long run, price of the auto will turn out to be 1,81,818. Can you write down this in your books now? All of you? This is a very, very important concept. I'll explain the integrities of this after this. Please write down till here first. Alright friends, have you all put up till here in your books now? Fine. Shall I go to the next page now? Friends, here you got the answer as 1,81,818. I will show you how you get this answer now. Here, cash flow, discount factor, discounted cash flow. At the end of year 1, are you getting 2 lakhs as a number? Discount factor is how much? 10%, 0.909. 1,81,818. Is this exactly the same answer that we got earlier? Or can I say how I got this answer is nothing but I took the present value of 2 lakh? Or friends, can I say value of an auto is the present value of the future cash flow which the auto can generate. Just write down this. This is a very, very important lesson. I will elaborate and explain this in multiple angles once you finish writing this. Please write down this in your books, friends. Alright friends, have you all put up till here in your books? Now friends, listen very carefully. This is a universal truth. In this case, value of this auto was nothing but the present value of future cash flows that the auto can generate. Let me give you a scenario now. Right now, for transport purpose, there is buses available, there is taxis available, Ola is there, Uber is there, etc. is there. That is the reason auto is generating only 2 lakh. Suppose one day government comes with a rule from tomorrow, no Ola, no Uber, no taxi, no private buses or public buses running, no trains also. Only one mode of transport will be auto rickshaws, nothing else. If a rule like this comes up, what will happen? Vetri, will he make 2 lakh or will he make more than 2 lakh? He will make maybe 10 lakhs. Now tell me friends, if Vetri is making 10 lakhs, will he have a problem paying 3 lakhs for the auto, 4 lakhs for the auto, 5 lakhs for the auto? No. The price of the auto will go up only if the future cash flow of the auto will go up. But suppose tomorrow the government comes up with a rule that taxis can charge prices lower than the autos. Now auto will not even get 2 lakh. Auto will get much less than 2 lakh. In that case, the price of the auto will come down. Or friends, what I am trying to tell you is that value of any asset is nothing but the present value of future cash flows which the asset can generate. If the business can generate high future cash flows, the more will be the value, and if the asset or business can generate less future cash flows, the value will be less. This is a universal principle. Value of an asset is nothing but the present value of future cash flows that the asset can generate. I can give you multiple examples for this. Tell me who's your favorite actor. Okay, let us assume Rajinikanth is your favorite actor. Rajinikanth, for one movie, how much money does he charge? He charges huge. Why does he charge huge? Is because value of Rajinikanth is nothing but present value of future cash flows that Rajinikanth can generate. Rajinikanth gives all hit movies. Okay, whether the story is good or bad is a debatable question. I'm not getting into that. But one thing is for sure, if Rajinikanth is doing a particular movie, that movie generates future cash flows. If it generates good future cash flows, the value of Rajinikanth will become high. That is why he charges more money for a movie that he does. But tell me about any flop actor. Think of any flop actor that you know. They won't be charging even 10% of what Rajinikanth is charging. Why? Because value of a flop actor is nothing but present value of future cash flows that the flop actor is charging. So that is the whole story. Value of an asset is nothing but the present value of future cash flows. I can go on and on this. For example, Facebook purchased WhatsApp. Do you know how Facebook valued WhatsApp? It valued WhatsApp based on the number of users who are there on WhatsApp. There were, let's say for example, 1 billion users. How Facebook put the value was, if there are, let us say 100 users are there in WhatsApp. Okay. If each of the user will give me, or let's say 1 billion users are there. If each user is giving $1, how much money will Facebook make every year? $1 billion. Keeping this equation, they found out the future cash flows of WhatsApp. And then what they did, they took the present value. That is how Facebook actually purchased WhatsApp. And that is how all the deals actually happen. Value of a business or value of an asset is nothing but the present value of future cash flows that the business can generate. This stands true even as far as the accounting standard is concerned. There is a standard which is called as accounting for leases. There are two types of lease. What are the two types of lease? One is a finance lease and what is the other one? Operating lease. How do you work out the finance lease? It is nothing but the present value of future cash flows, because value of a lease, finance lease, is nothing but present value of future cash flows that the finance lease can generate. You must have learned another accounting standard called as impairment of assets. Here you have a concept called as value in use, which is again nothing but present value of future cash flows. And then they say if this is less than the net selling price, we should book for impairment loss. You must have learned one more standard called as employee benefits. Once you do this standard also, there are two things. One is called as defined benefit plan, other one is defined contribution plan. In defined benefit plan, the value of gratuity, etc. is found out by using what? Present value of future cash flows. So friends, you have to by heart this one thing. Everyone please repeat with me 5 times. I know you're not there in front of me, but when I read, say out, you read out with me. Value of an asset is present value of future cash flows which the asset can generate. Once again, value of an asset is nothing but the present value of future cash flows which the asset can generate. Value of an asset is nothing but the present value of future cash flows that the asset can generate. Value of an asset is nothing but the present value of future cash flows which the asset can generate. One last time, value of an asset is nothing but the present value of future cash flows which the asset can generate. Can you please write down this in your books, in your own language now? Please write it down. I'll give you a minute's time. You can write down these options or these points also. Once you are done writing, please chat and let me know that you are done. Okay. Alright friends, have you all put up till here in your books? Once you're done writing, just chat and let me know that you're done. Okay. Alright. Alright friends, I think you're still writing. Let them finish. Alright, Saddam is done. I'll just give one more sentence for you to just get the whole grip. In the long run, this is very important. Value of an asset is the present value of future cash flows which the asset can generate. In the given case, since car is generating 2 lakhs of future cash flow, value today should be, you have to underline this word should be. Actual value might change, that is where we make a profit. Value should be, value should be how much? 1,81,818. Can you write down till here in your books now? Alright friends, have you all put up till here in your books now? Okay, so we are done with this concept also. This was concept number 5. Let's do one last concept before we pack up today's session. Concept number 6. In the long run, IRR and discount factor will be the same. Can you write down this heading in your books now, all of you? Okay, I'll explain this part to you now. Now tell me the earlier example, the asset value became how much? 1,81,818. So I'll now draw a table over here. Here, cash flow, discount factor, discounted cash flow. Okay. Year 0, the price of the auto is how much? 1,81,818. Year 1, it became how much? 2 lakhs. So it will be 1.909, 1,81,818 plus 1,81,818. Do I get the NPV as 0? Have you not learned that the rate at which NPV becomes 0 is called as the IRR? So can I say in this example, discount factor is 10%, IRR is also 10%. Or friends, the moral of the story is very important and very easy. What happens is, Vetri was expecting 10%. Because he was expecting 10%, the price came down to 1,81,000. Because the price came down to 1,81,000, NPV became 0. So can I say in the long run, if I expect 10%, I will play with the demand and supply in such a way that the price will fall down to such a point that my NPV will become 0? Or can I say in the long run, whatever is my discount factor, that has to end up as what? IRR. So can I say IRR and discount factor are the same but only in the long run? Okay, can you write down this in your books now? This was a little heavy concept. Once you revise once again, later on you will understand it better. Are you all done with this? I'll write down over here the logic of this. Okay, I'll write down. Since Vetri was expecting 10 percentage, price, not only Vetri and others, everybody was expecting 10 percentage is the assumption over here. Price fell down to how much? 1,81,818. Okay. Due to this, NPV became 0 and 10% became the IRR. Hence, we can conclude that in the long run, discount factor and IRR will be the same. Can you please write down this in your books and finish it off? Alright friends, have you all put up till here in your books? Okay, so we are done with this concept also. Being the first day, I don't want to take too much of concept for you and overload you. Just confirm and let me know, are you all comfortable so far? Have you understood whatever we have taken so far, friends? Okay, there's a doubt. Shalu, you have asked that how to deal with uncertainty if we are not getting the assumed cash flows and we result in a loss. Shalu, uncertainty is a part and parcel of business. There are two words actually. One is called risk, other one is called uncertainty. We don't like using the word uncertainty because coronavirus was an example of uncertainty. Okay, but that is not something what happens every day. Risk is something which is a part and parcel of business. That is why, because there is risk, you are expecting more return. Otherwise, you can just put your money in bank, you will get a 6% FD for sure, right? Here there is risk, that is why you are expecting more than 6%, that is you are expecting 10%. Alright. Frank, you want me to repeat this part? I will repeat this part. I have written down the whole thing. Have you written down this in your books? If you written it down, I will repeat this part once again. Okay, Frank Vetri, I think you told me to repeat it earlier. Now I have given you the same thing in writing. So, do you want me to repeat the same thing again? You tell me, I will do it. Thank you, Sharanya. Thanks, Soumya, Meghna, Sitara. Let me just confirm that Frank and Vetri has understood everything so that I can proceed further. Can you just repeat once again for Frank and Vetri? Look, what happens over here is that Vetri was expecting a return of 10%. So when the price of the auto was 2 lakh, he was not able to buy the auto because his expectation was not being fulfilled. Hence, what did Vetri do? Did not buy. Just like Vetri, everyone did not buy. That is the reason the price came down. Once the price came down, Vetri started buying. Others also started buying. That is how the price reached an equilibrium. So can I say, because Vetri was expecting 10%, that is why the price fell down to 1,81,000. Once the price fell down to 1,81,000, what happened to the NPV? NPV became 0. Rate at which NPV becomes 0 is what we call it as IRR. So can I say in this case, discount factor is equal to IRR. Alright. Fine friends, so we are done with today's session. I hope everyone is clear with this. Now before I pack up, I would like to share one experience which is important for you to know. I started my class today with the learning that you should do every question 2 times without looking. I will now share with you a story of a person whose name is Shanil Usman. He was my student back in 2012 or 2013. I don't exactly remember which year. Today he is a chartered accountant and he is also a law faculty in Kerala. Friends, Shanil, when he attended my class, at that time being a regular class, I used to ask them to work out every question 3 times without looking. So the class timings used to be 7 o'clock to 9 o'clock. I used to tell everyone that, please go back home, write down it 3 times and bring it back to the next class. Since it was a face-to-face class, I could actually check their notebooks, and that was the time when I actually started my teaching, and there will be around 20-25 people in a class, that's all. So when you have that kind of a crowd in a class, I could go and check their books one by one. So while checking, there were other students were there, but Shanil was one person who used to do his homework promptly. Every day, if I do 5 questions or 6 questions in class, how much ever busy he is, how much ever busy work he had, he made sure daily he will work out every question 3 times and come back and show me. He was so good that sometimes when other students will ask me doubt, I can clarify that. But doubts what Shanil used to ask me at that time, I used to find it very difficult to crack. And many a times I had to go back home, re-refer what he had asked me, check and then come back and clarify his doubts. One thing was sure, the way Shanil was preparing, he was sure shot rank holder. And that is when the exams were coming. And just 2 days before the SFM exam, I get a message from Shanil stating that I am down with a 105-degree fever. I don't think I can go and write the exams. I was all shocked. I had seen Shanil work so hard. I so badly wanted him to become a ranker this time, and that is when fever is coming and hitting him. I told him, Shanil, please be cool. You have high temperature. Take some Dolo tablets, which is very strong. Sleep, don't study, but don't try missing the exam. Somehow just go write the exam and come down. Those 2 days, Shanil did not study. He just took tablets and he was sleeping the whole day. Finally, the exam day came. He went to the exam hall and he only wrote the exam. He could not even revise once. The exam got over. 5:30 in the evening, I'm getting a call from Shanil and he's telling me, sir, the moment I saw the question paper, I did not do any revision one day before the exam. But the moment I saw the question paper and when I saw the questions, many of the questions were coming right from the book, and those questions he had worked out 3 times without looking. So the moment he saw the question, answers flashed back in his mind as if he has done that yesterday, and he could write that paper properly. And finally, when the results came out, Shanil scored 47 in SFM without even touching the book 2 days in advance, and that attempt he became a chartered accountant. Friends, a very powerful lesson what I got from Shanil that day was, whether you become a CA or you don't become a CA does not depend on the preparation one day before the exam. It depends on your preparation now. It depends on how hard you work every single day of your life and not only the last 2 days. And because he worked out every question 3 times, the question, the answer and the logic went deep down in his subconscious mind that even if he wanted to forget, he cannot forget it. And that was the point when he actually went, wrote the exam and he became a chartered accountant. So friends, my request to all of you is that if you really deep down want to be successful in life, if you really want to be a perfectionist, you want to be a specialist, you want to be a chartered accountant, please repeat what is done again and again and again so that it goes deep down your subconscious mind, after which even if you want to forget, you cannot forget. So my request to all of you friends, whatever questions we work out in the class, please revise at least 2 times without looking. Why I say without looking is because if you just look and copy paste, it's very boring and it does not give you any challenge. If you recall from your mind without looking at any particular place, your brain will be challenged 3 times. Once your brain is challenged 3 times, your brain will get stronger and you will get better results out of this. So friends, let's pack up today's class with this. See you tomorrow morning at 6:30 a.m. First 4 days the class will run on YouTube also and it will run in the website also. after 4 days only in website with user ID and password. Thank you so much, friends. Have a nice time ahead. Take care. I'll hold on for a minute. If you have any doubts or anything, you can put in the chat box right away now, or you can join the WhatsApp group also. I'll wait for 2 minutes more. Anything you have to ask, you can always ask me. Then we'll pack up with today's session. Thank you, Sharanya. Thank you, Vetri Gautam. Thank you, Akshara. Thank you, Rito, Gayatri, Shaluana, Kishore, Sitara. Thank you, Akshay. Thank you, Bhaskar. Thank you, Meghna, Riya, Shalini. I believe there are no particular doubts to be asked. In that case, we can pack up today's session. See you tomorrow morning at 6:30. Have a nice time, friends. Thanks a lot. Sharanya, yes, you want to get the material? Wait, I'll share the material with you right away now. Good, you told me about it. See, you can just come to my website, tarunjagdish.com. Alright. Here you are having free videos, revision, pen drive. I think it's with pen drive. Just click on pen drive. Download SFM notes. Click over here and you have the entire material available over here. Okay. If any changes I want to make, I'll make it right away over here and I will be sharing the same thing with you. Alright. So I repeat, just come to tarunjagdish.com, pen drive or Google Drive. Over there you can just download the SFM notes. Alright. Okay. Thank you so much.